Morning everyone, and welcome to today's trading analysis on the 11th of March 2023. And what a turbulent time we are now under. Silvergate closing down, Silicon Valley Bank closing down, USTC losing its peg. Look at that last night. The regulators are taking on crypto quite heavily at the moment. Yeah, where does it all lead us? Let's get back into the technical analysis and see where we are. So currently on the weekly scale, you can see that Bitcoin has been rejected from it overshot this little trend line a little bit in this falling wedge and is now trading below the 21 moving average. That is a little bit of a bad sign, just something to take note of. Ideally, we would like to close this week off above 21,200 so that there's a wick below this 21 moving average and then move further up. That would be an ideal situation on the weekly scale. On the daily scale, you can see the story is looking quite a little bit different. You can see that we formed a daily 9 on the 200-day moving average with a hammer-looking candle. That is absolutely beautiful and a potential buy opportunity. You can also see that the RSI is oversold. And the last few times that it has been oversold, we have seen some significant upward movements. And I think this could be a good time to dollar cost average if you're looking at the daily chart. Looking at the funding rate, you can see the funding rate has got negative. That means that people are more short than they are long again. And quite interesting, this is even worse than after the FTX drop. You can see that the only time it was worse was during the Elon Musk capitulation 2 years ago. After that, there was a little bit of a downward movement and then up almost 100%, if you can look at that. Almost 100%. And then at the FTX drop, you can also see that we were up about 50%. I do think at the moment it looks like it's making a higher low and therefore upward movement here with all this funding rate getting all those shorts liquidated. So short squeeze potentially incoming. XRP is looking slightly worse. You can see it's trading below the 21 moving average. And you can also see that this is a doji, shooting star candle. On a weekly scale, this is not healthy at all. On the daily scale, there's not really much to say. You can see there's a bit of a support line here. It's also been rejected by the 200-day moving average. Not looking healthy at the moment. So hopefully the fortunes change a little bit. The S&P, you can see that we are making a bit of a divergence at the moment. So currently we're trading at a higher low. Well, that's if it forms a higher low. And it's making a low on the RSI. So a turnaround here would then play out that divergence. You can see that it's just past the trough area. In cycle analysis, what that means is when you have an early turnaround in the cycle, that's actually quite a bad sign. So from an S&P perspective, this is actually not looking very good. And we should look towards mid-April and for some more downside. I'm hoping that's not the case. So for now, let's just keep a close eye on that. The US dollar is actually being rejected from the 21 moving average. So it's pulled back to the 21 moving average. This weekly candle is a shooting star candle. Does look like it wants to move down now. So with the US dollar moving down, this could cause the S&P to move up. And of course, crypto to move up with it. All in all, I think crypto is in accumulation phase. It is potentially forming a higher low. A higher low is a bullish development. For now, we should treat it as such. And until crypto has moved under 18,400, for now, we should look at it as a bullish setup. If this information was useful to you, please like and subscribe. And let's see you on the next one.